Good morning. All right. Good morning, all. I'm going to share the link with Costa. Share my screen. All right. Here we go. Let's review yesterday. First and foremost, if you're one of the founding members of the Captain's Time, please, and you would like to appear on these morning shows to learn how to do the process yourself, DM me on Substack and we can make that happen. All right. All right. So moving forward, see if Costa wants to jump on. If not, that's fine. All right. Looks like we got some people. Oh, Sapphire Trader's in the house. Sapphire Trader's a really good one. Matt's in the house. Good morning. Del Gordon. Good morning. All right. So let's review yesterday. All right. So yesterday we went through and put like the highest probable trade on our charts, right? And it decided to go against it, right? We have a London over under line, and we have a Asia over under line. All right. Up. Looks like. Good morning, Costa. Or
Good.
afternoon, whatever it is.
It's still morning. Good morning, Mickey.
Hey.
Okay.
Yeah, I'm good.
Good
So
man. Good man.
yesterday, right, is a
Yeah.
prime example of why you have to line up historical data with live price, because live price gets to always trump historical data, right? So we went through and we used multiple variables. We used our time-based projections, our projection-based projections, our structure-based projections. We incorporated what Asia did in relationship to London. We incorporated what London did in relationship to Asia, and it gave us the highest probable outcome, which looked exactly like this. So now we're going to double strain it, and we're going to rewind to how we're supposed to do this. All right. You guys hear my dogs in the background. I'm sorry. They're rowdy early in the morning for some reason. All right. So we were approaching the low of the day zone. The 9 o'clock hour came up to come down, right? The 9 o'clock hour is very confusing. And if you use the 5-9 box, you'll realize like, you realize that this 5-9 box, right, for the 9 o'clock hour, we usually see the false move pre-market to be able to see the distribution, right, lower, right? This was for my 930 traders. You can see, Biscuit, you gotta hush. Let's put on the opening range stat, which this isn't. This is the average opening range over the last 10 days. This is from the 9:30 to 10. This is from the 9:30 to 10:30, right? And so right here we open. We go up 50%, which is why that 9:30 trade, I tell them to exit at 50% of this range right here. And then we shift. We do the reversal for the 9:30, which is a very common signature, right? And we start coming down to approach our low of the day zone, right? And we had this probability down here that had 70%, right? And this one down here that had 56%. So the mistake I made yesterday is if you go back and look, right? yesterday was a really, I messed up yesterday, right?
Me too.
I usually have a 30% to capture the extremes, and yesterday was the first day I did 73 at the top, 56 at the bottom, um, and I said, what's the likelihood of this? I got my bias to the upside taking out this high right here. Even though the market hadn't shown its hand or anything like that, I neglected the fact that this low was just as powerful as this high, right?
Yeah.
And had a dog in the fight, you know?
Yeah.
But because I saw the 95% right here, I saw the 73% right here,
Yeah.
like I said, we're going to respond, right? So at 10 o'clock, I engage in a long off of this rejection right here. One, two, three, four,
Yeah.
five. And this week is the week that I'm testing bigger size for my account, right? Now, knowing what you know about the 5-9 box, I want to ask you guys what mistake did I. Okay, so I entered 4 minis right here. What mistake did I make? Knowing the market conditions, knowing how we're supposed to build the risk profile around the market conditions, knowing all that, what mistake did I make using the 5-9 box? See if you guys been paying attention. And you can answer too, Costa.
Yeah, I'll give it a second, see if we do anything in the chat, but I've got something I want to say. We got anything coming through? Okay, so we're below the 5-9 box. You've shot 4 at that. Obviously, I'm not unsure of the risk profile there, but if you're thinking that that is at that point appearing to be a reversal to go up, then maybe it was too many, and maybe it was too soon because you're the wrong side of the 5-9 box, and you're at the extreme low of the
Yep,
hourly box. That's what I think.
exactly.
Yeah,
So and I don't know who Real Human Review is, um, but yeah, like we teach this every day for free. All right, so listen, like I tell you guys, right, if we're expecting a reversal, you should be cost averaging down,
yeah,
right? If you're in a range, you should be like shooting your shot. Like this is a range, so should be buying my 10 contracts here and taking profit at low hanging fruit, being the previous hour midpoint, the previous hour high. If we're in a trend like we were here, like I should be trying to sell like my initial position up here for the reversal, one, add in one right here on off the rejection because we're below previous hour midpoint and we're below and rejecting that hour's 5-9 box, right? Just like we should be continuing that trend right here. When we get below the previous hour mid and below the previous 5-9, we should be adding to the trend,
yeah,
right? This is still below previous hour mid and we're still below the 5-9 box. So if I'm trying to capture a reversal, right, then I should be engaging one contract here so that if this properly reverses and we get a new arrow, we get back above previous hour midpoint, above 5-9 box, like I add another, and then I add
yeah,
the other two
yeah,
on the trend, right?
yeah,
But because, like I always say, as long as you manually trade, you always, no matter how experienced you trade, like I've been trading for a long time. I've been trading these theories for a long time. I literally am surrounded by professional institutional traders at work every single day, right? I talk with hedge funds all day long with their traders, and they'll tell you the same thing. Like, this is why most of the time they have data scientists who are coders who control the trades because they don't have the barrel chested athlete that used to be a NFL player managing the trades anymore because of this
oh,
mistake right here.
yeah,
A computer does it heck of better when you establish the rules, right?
yeah,
So because I saw that I was engaged with this 70% probability and I actually had to do margin calls at this time, I decided to rush the system. And this is the week where I'm trading my personal account with real size. And with roll size, like I've already identified this of because I'm stress testing my account, right, to see if I'm ready to increase the size of my trades. And so I defined that I would not lose more than $2,000, and because I let a work issue, right, influence my trade, right? Like I set my stop to $2,000, engaged in all four, walked away, said it wins. If it dies, it dies, right? Let's see, right? Which is the stupidest thing you could ever do because the reason we do the live price and the risk profile around the previous hour mid and the current hour 5-9 box is to understand. I know you from 930 models, similar like that throughout. Tanya, ICT, happy to be in your stream. Yeah, thanks. Tanya is a really outstanding trader, and proud of all the work she's done so far for the community. But yeah, this is why we take the historical data and the highest probable data right here, right? And here's the problem that this is what it was, right? You see, let's go to a 15-minute chart. You see all of these 15-minute highs right here, this smooth transition. Like this had an 80% probability of being returned to that day, right? I ran the numbers and everything. Well, guess what gets to beat historical data? Live price. So that was the ultimate confluence, right? I had every scenario possible saying, we're going to go long, Mickey. We're going to go long. You've got to go book margin calls and be away from, you're going to miss the best pricing possibility throughout the whole day. But listen, these probabilities are a thing of historical data. They're in the past.
Yeah.
And the reason why the win rates and, you know, all that skewed is because, and I want to read this, because the risk profile has to be built around it specifically, every single strategy, right? Kind of like I showed you
Absolutely.
guys with the
Yeah.
Asia trade, right? Like in me and Austin mentioned a really awesome thing yesterday that like really resonated with me. So I'm going to read it out loud because it really hits it on the head of what I'm trying to convey. So win rates is used entirely in the wrong context of trading. The reason most people are losing at trading is because win rates built into their model through the risk and profit they measure. But the risk and profit they measure are meant for that present price action, not current price action, meaning historical is built for historical price action, not the live price action. Right? Win rates, from what I am discovering, are made on analyzing the consistency of the move rather than consistency of a profitable trade. Because think about it, if a winning trade is only derived from a high frequency, frequently occurring move in your model, but if you build a model and that model foundation at its core is built on outdated risk management versus the consistency of that actual move,
Absolutely.
you will always be trading overfitted models. Thus, why our success works. Instead of putting risk before the consistency of the move, we put consistency of the move and then structure risk around it,
Around that.
right? Which is what I failed to do yesterday, right?
Yeah.
We put consistency of the move and then structure our risk around that because if we know any point has an 80% objective black and white occurrence over historical data and recent data, then all I need to do is structure risk around that versus trying to have the perfect risk to reward that has a starting foundation of risk, right? And so, for example, right, this was my target yesterday, right? This had an 80% probability of being returned to, right? Now, these are individual times that are constant, right? They don't change. The probability of us returning to them are based off of historical data, right? And so over the last 2,000 days, 80% of the time they were returned to in that day by 1600. Now, let me go to NQ. So if we know that these highs right here have an 80% probability over the last 2,000 days based off of the time factor, not any kind of order block or liquidity pool or whatever, right? That I'm looking at, right? Then my job is to define my risk, right? Which we talk about all the time.
Yeah.
And so let's say we're going to push a 1%, right? And if you collect the data on this, right, what he means by this is the moment, let's say we make this the low, we're anchoring off the low candle, which is from here to here. The moment we have a 15-minute close below that, we're just going to buy 3 micros, right? 3 minis, right? We're doing it on the mini, but it's going to be represent the micro. It's the same concept.
Yeah.
For this to actually work, right, and if we're targeting these highs, we have these zones right here that we need to build the risk profile. So if we're trying to engage live price, if we're trying to engage a reversal here, then we need to have the reversal data from anchored off of this 5 o'clock candle. So after 5 o'clock, how far down over the last 2,000 days does it reverse, right? And I do have that data, but I can tell you right now, like if it says that it has all these measurements of reversals, like this day it reversed around here, this day it reversed around here, this day it reversed around here. We would say these represent 20 days or 100 days, whatever.
Yeah.
Right? And then like we see that majority of the reversals are happening within, this is measured wrong. This should be on the breakout candle like that, and this should be right there for the 15-minute. So after we break out of that 5 o'clock zone right here, we have all this reversal data that says majority of the time the reversal after we break out on a 15-minute chart will happen within this zone after 5 o'clock. And then these red dots represent like 20 days, right? And then we'll put a couple more right here. Right, and you can see that the variance, right, shows, right, it's offsetting, right? Sorry. And this is why I tell you guys to measure data, and especially reversal data for time frames, so you can get this, right? And then you have your data below that 1%. That is extreme risk. So you can see, all right, we're measuring off of this 5 o'clock candle, right? And there's an 80% probability that once we break out of this side, that we would hit this side, right? And if you have the right data, you'll see that majority of the time, like the reversal data will fall out in this zone over time, right? And then it's the variance, right? Because remember, this is the constant, right? This is the breakout candle, the area that we're trying to figure out, right? And then we can see that the reversals start lightening up. And if you look at the reversal data like I have, every 15-minute candle in the day and every 5-minute candle in the day, right, you'll be able to get these kind of reversal data, right? But what this is telling me, right, is that once we hit the 5, right, it's more likely to hit the 1 than to hit the other side, right? So my job is to build a reversal, a break, get out of the trade plan
Yeah.
once we hit the 5, right?
Yeah.
So how we do that is once we hit the 5 right there, our job is to get out of that trade however we need to, right? So we add 3 at the 5 and then we move our take profit to stop. So
Yeah.
we're either going to get stopped at this point or we're going to hit break even, is what I'm saying. And when you have the
Yeah.
reversal, so that once we cross this 5, right, we know like it's more probability of us getting stopped. So we need to just get out of the trade,
Yeah.
right? And in this case, we got stopped out,
Stop.
right? If you look at, let's do Asia. No, that actually worked. That didn't. But does that make sense, right? So you have to
It
have those
does.
reversal plans in place, and most of the time you can get out of. If you measure the model that you're trading, most of the time you can get out at break even and prevent a losing trade by having this kind of data, right? A lot of people are too lazy to collect this data. They'd rather just take the loss. But year over year,
Yeah.
like those losses add up. And,
Yeah.
when I look at it from a different approach, most people look at it from, you know, I don't, what the hell did I just do? Undo. Most people look at it from the approach of, let me erase this. Most people look at it from the approach of a loss is a loss. They hit it over time, but I look at preventing a loss actually adds to my P&L. Just like
Yes.
cash is a position too that will save you
Yes.
from the loss
Yeah.
if the elements aren't lining up for your model. I
Yeah.
also look at knowing when to cut the position at break even. Mastering that is going to benefit you over time. Just like on Captain Backtest, I wait for the right momentum to hit on that 5 minute candle because like I've been stopped out so many times that week over week, year over year, quarter over quarter, those little nicks that you catch,
Yeah.
like they add up huge. And
Yeah.
if you look at all your losses that could have been prevented for the year, you leave a lot more money on the table than you're making in profits, right?
Yeah.
But back to this, right? So we saw that. Go back to here. Why is this not working? There we go.
There you go. There you go.
So when you take trades, so the proper way to do this, if I'm expecting a reversal at this low of the day zone, right? I'm using micros and I'm starting a position, right? Starting a position with a fourth of the actual account,
Yeah.
right? So for me, if I'm trying to engage with, 4 minis, a fourth of that would be 1 mini, right?
Yeah.
So like we take our initial position, right, of 1, and then we're looking for the proper reversal to happen so that we need to get this new arrows opening up and we're opening it at the extreme. This is why we do a fourth of our position in reversals, right? Because we know that if this is going to be the true trend, I will have plenty of time to add
Time.
to a trend, right?
Yeah.
Because at this point it's 10 o'clock. I still got 7 hours left of the trading day into
Yeah.
my 4 minis, right? This is why, like, I preach to you guys, knowing the proper risk profile that you put under the right market condition is huge, right? If you're going to discretionary trade whatsoever. And then that way, like, right, let's say you're going to do 4 micros here, and your max allowance was 750, right? You give yourself breathing room to capture that reversal, right? So that means price would have to come down 400 handles. So I have room to add to the position, take away the position, et cetera, but it still doesn't jeopardize the cost allowance I have for the day.
Yeah.
And then right here was the key signature. And this is why I tell you, like, I'll put my cost allowance at 750 because I know that if I'm actually in front of the charts, right? In this case, I was booking margin calls, so I just like set my stop and walked away, right? Right here, what is the 5-9 box telling you? What are the two clues that tell you about the market condition? Number one, what is live price telling historical data? It's
Yeah,
telling
well,
us, get over it. Like, we're not playing. We still don't have the confirmation yet, right? Because we can still be right up into this previous day low, but this hour is about to show you a huge signature that tells you you're absolutely wrong. Get out
yeah,
of the position,
yeah,
right? And it does it, right? Does the 9-minute here,
yeah,
right? So now we have two things going against us, right? Which is we're below previous hour mid, and now we're below 5-9 box. There's no way we can add to the position. At the end of the day, you should be cutting this position altogether because this is showing a trend condition, not a reversal condition whatsoever. Unless, and let's say we want to give ourselves this hour to look for the reversal. What price has to do to keep us in this position is jump above the 5-9 box and find support either at the high, the mid, or the low of this 5-9 box, right? So now, is it doing that, or what are you
no,
seeing? Is rejecting it at
yeah,
this point, right? Let's say you still want to stay in, right? You're down 175. When are you going to say enough is enough? What about this rejection? Are you going to say that's enough? What about this rejection? Right? When are you going to say enough is enough? Right? I'm wrong for the day. Up, I'm waiting for a sweep on these days lows. When are you going to say enough is enough? You're
that,
obviously in a trend position on the wrong side of it. So the faster you can identify that in a professional manner, meaning you've given yourself space for it to reverse right here. But then when it rejected here and headed lower, you should be cutting this trade because it's telling you, it's
yeah,
screaming at you, reversal, 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 stupid. All right.
yeah.
All right. What were
Well,
you saying?
I wanted to ask, so in that situation where price has developed the way that it's developed, and obviously we're looking to get out of the trade, given what price had done with respective to the other sessions, would that or could that have triggered actually a reversal in thinking and perhaps I'm not
You
just exiting this trade, I can go short now.
you should have thought that way. The moment you identify the trend position, that's why I told you, like it's harder to be a reversal trader than any style of trader out there because you'll see you'll see the right answer in front of you and you choose to ignore it because you're already in position. That's why the easiest thing to do in those situations is just cut the position. Take a step back, look at the market clues that they gave you
Yeah,
and trade towards that market clues. Have you
yeah,
ever traded where you try to counter trend? And this used to happen to me all the time when I was younger. Um, and I was in VWAP's room, which Sherry knows. He's an old market maker and blah blah blah. Right? Like I used to trade against a trend all the time, and it was at some point, at one point, I would just cut the position. I would stop counting trend. And I would go the opposite and like I'd get a brush of fresh air because like I instantly was in profit, right?
right.
Versus when I'm counter trading, I'm constantly in drawdown, waiting for the
Yeah,
reversal to happen.
yeah,
This
yeah,
is why people tell you to stop trying to call tops and bottoms and go with the meat in the middle of the trend.
yeah, yeah.
But
I
at the
was
end of the
chat.
day, like I
Sorry.
don't trade like any of that anymore. I'm more a statistical based trader than anything.
Best way to be. When it was playing out yesterday, I was chatting with a friend, and I actually said something along the lines of that. It's like when you're in this position and you're thinking, I'm trying to claw my way back to like get out to break even then, or whatever, something close to that. But you're reading price, and all of a sudden you get better at reading it because you kind of know um, what's coming. I guess it's
Yeah.
because you structurally you see the way it's developing, right?
Well, that's why I tell you, like, that's why I don't change my workflow process. That's why I don't change the way I see price. I don't change that because the more reps I can get of that, the more I can focus
Yeah,
on
yeah, yeah.
the more I can focus on the more I can focus on the generated market clues around the way the systems I use, right? And that's more important than having the fanciest strategy or anything out there because the data that I get from it is more important to measure over time because that's why I tell everybody pick a model. I don't care what model it is. Start collecting reversal data, start collecting extension data,
That's
start
it.
learning how to master the performance around that because the most important part is identifying the market conditions and making decisions around that model. That's why I tell you, like I use the 5-9 box in the previous hour mid. I never changed my workflow process for the historical data because whether there's something better out there, whether there's something worse out there, I don't care because the
No,
strategy is a tiny, tiny, tiny bit. Like it's not even that big of a. The strategy is the least important thing in my eyes, right? The strategy is like irrelevant, right? The decision making around that strategy is more important. The risk profile around that strategy aligned with the market condition is more important than anything a strategy can give me, right? Like that's why I laugh at the ICT traders, I laugh at the DR traders, I laugh at the support and resistance traders because they jump from one strategy to another, and they chase their tail, right? When it's like just pick one thing out of that and
agreed,
start learning how to make decisions around it
agreed.
and measure the market conditions around that way of seeing price. And then now you know how to properly build a risk profile and a model that aligns with a model. And now you have the data for that, right? Which is more important than anything. Do you think
I think
Oliver Kill, right? Do you think that when he started, he wanted to be known for the guy that uses moving averages, right? Do you think he wanted to be known for the guy who uses moving averages? When his daddy was a market maker, when he comes from a financial institutional style trading family, he's an he was a professional athlete and he's using one of the most basic tools in the market. And guess what? He learned, and he'll tell you, he learned that these are for decision making to understand where the market is in relevance, how to identify the market condition off of these moving averages. And he's got all the data and he knows how to make decisions around the market condition that he's in. And guess what? Everybody wants to worship these cult like followings. And guess what? He's made 941% in 2020, 630% something percent in 21. He's made over 500% every single year.
wow.
That he submitted his process and said enough is enough. I'm going to be the guy that makes my millions, and he does every year with moving averages, and that's enough because he understands as an athlete, as a previous athlete back in the day, it wasn't about he didn't jump from being the quarterback to the wide receiver to the
This is
center
it.
to all
Yeah,
this.
yeah,
No, he said, "This is my position, and
yeah.
this is what I am going to smack right in the face. I am going to be the best this position. I'm not going to change positions." And he did the same thing with trading. And when I talked to him, every single time I talk to him, right, I'm like, he doesn't change. Now we'll trade in NASDAQ together. He trades companies, and it's like, hey, this is what I'm seeing. Yep, that's what I'm seeing too. Hey, this is what I'm seeing. And we speak the same language when it comes to these moving averages because it's like, why would I come in here and talk to him about NFP Friday and previous month mid? I could, I have talked to him about that, but he doesn't need that, right?
Hmm,
He's like, I see it with my moving averages. So it's like, you're right. Like, you don't need advice from a quarterback when you're a wide receiver or when you're on the defense, right?
right.
Um, and that's where you have to surround yourself around like-minded folks, not the coolest
Absolutely.
people on Twitter, right? Like-minded folks who see the market very close to you. That's why me and Mr. 930 get along so well. Is because we see the markets and we price the market, we price the market in a very similar way. And so it's like, but I know better than to sit here and tell Mr. 930, hey, have you thought about, you know, adding this statistical data to your chart? No, because it will confuse the shit out of him, and then it will skew his decision making. But I have sat there and shown him previous hour made in 5/9 box because it aligns with his time clusters anyway, right? So you need
Yes.
to be very aware of who you surround yourself with, and are they going to confuse your decision making around your data, or are they going to enhance it? All right, we do have to get going though. Nice,
While
nice.
you're getting going there, that's absolutely correct. Because if there's one thing that I've learned over the last 6 weeks or so, is actually with a process that I used to work with and kind of still do, is that it was removing one step from that that actually made things a little bit more clearer. It was a friend's who came up with that actually first, but simple workflow, simple process, right?
Absolutely. All right, so we rejected the previous month mid 1, 2, 3, 4, 5, 6 times, right? 6 times. You should not. You need to be hedged, right? Because we're
Yeah,
above previous NFP and we're above previous month 50%. You should be hedged right now if you're in the equity space. If you're selling risk premium, aka put structure on
yeah,
the option wall, right? You need to be 25 delta out at least 45 to 90 days, right? So this can have space to let that premium die, right? Um, when it comes to intraday trades, guess what? When we're between these two zones, like if we were above this, we'd be looking for the low of the day. If we're below this NFP, we'd be looking for the high of the day between 5 and 11 o'clock. But because we're slap dab in the middle of both of these, right, we're looking for both the high and the low of the day, right? Which makes it a little bit more complex.
yes,
If it's not that clear for you, like it has been for years, right? This is the first time that we've seen in about 2 years that it's done this move, and it makes decision making a little bit more harder, which is okay, right? We had plenty of things to measure, right? Moving to the
yes,
weekly, it just means you need more confluence, and you probably should average down your risk per trade. You shouldn't be swinging with the 2.5 to 5% risk per
no,
trade. Should be swinging your positions with a 0.5% risk per trade.
okay.
Right. So now we are in the fourth week of the month,
Yeah,
and we are less than a percent away from the constant variable.
yeah,
All right. Looking here, we've been establishing the high of the day, doing that 5 o'clock to 11, high of the day, high of the day, high of the day. So we're trying to see if today's high of the day will continue at the open for us to head to that NFP. Moving on, generated market clues, right? There absolutely is none other than the rejection of this low, right? So we opened up the market. We came into yesterday's wick. So if you think of this as a daily candle,
yeah.
right, we can see that we drop down into this wick and we reject it. So that could be a market clue, but what London currently is doing is kind of throwing that clue out the window.
Just looking at that there, the month open, we are above the month open. Is that something
Yeah,
worth
bullish on the
considering?
month.
Yeah,
Bullish on the month. And
yeah,
not tomorrow, Thursday is the last day of the month. Friday is the first day of the next month. So, with that being said, right, like I don't really care about month opens or closes. I'm
right.
more about the momentum of like what is the month telling me, like at that current position. And this is currently telling me that we're going to have a doji month, right?
Yeah.
That's all it's telling me. Indecisive month, right?
Yeah. Yeah.
You want the listen, like you want the market to be clean and clear. But guess what? Let me show you something. The market is only clean and clear 3 times a year, right? And so your job is to identify, are you in a clean and clear market 3 times a year, right? 1, 2, and you could say 3 somewhere in here. Maybe this is 3, right? But this isn't clear
Right.
to me, right? But for this year, the market is clean right here and right here. The market is noisy right here and where we're currently at. The market is noisy right here. The market is clean from here on, and then it becomes noisy, right? The market is clean. The market is clean. The market is noisy. The market is noisy. So your job as a trader is to identify, is the market clean or noisy in your model? And if it's noisy, lower the risk, add a couple more steps for entry.
Yeah.
All right, so we just gave up the London OU line. Let's start getting our probabilities on the charts.
Yeah.
All right, I saw what you sent me. I just don't know what that is. I figured we can have a conversation about it offline.
Sure.
All right, where is our midnight price?
I've done mine, so I can call them out, or we can compare as. But I can get numbers, but the way you want them, if you
perfect.
want, whatever.
Yeah, that'd be perfect. All right, we're at midnight right now.
Yeah.
First and foremost, give me my line. Give me my line. Hello. It's stuck. Oh shit! I locked it. Unlock. All right. So midnight probability. Let me see. It's at 19,594. What's the probability?
I got 77.
77% between 8 and 12.
Between 8 and 12.
All right. Thank you. Let's do 1800.
1800. 1 second. Get rid of that. Between 8 and 12, that is just waiting for it to load. I've already got the number, but I want to be sure. 66.
Let's do 1615.
1615. First pass was 60%. Just double checking. 1615. Between 8 and 12 is just waiting for it to load. Come on. 60%. Yeah.
I'm going to start putting these ones on settlement.
Yeah, that's what I do. I kind of color coded them now for projection, structural, and
That's smart.
And then a little code so I know what you like: P for projection, T for time, and so on.
Midnight. Okay. I was just thinking about something. Okay. So now before moving on, like we're below the London OU, so if you're in a trade, you should be targeting lower prices. And then I think we're actually, for the live price part of it, yep, we're in a trend. Rejection off previous hour mid, below the 5-9 box, trending lower. All right, now structural points.
Yeah, that was so that was a bit trickier, but I have got. So I pinged one off the 1040 candle yesterday, which obviously only goes up to 1030, right?
Mm-hmm.
That's kind of around about the low of the day yesterday. and that gave me a 37% between 8 and 10:30.
I think
So
remember, right? Remember, it's better to do projection based unless there's obvious structure. Like
yeah, you
so,
said yesterday.
structure base is cool when the previous like if we weren't like if we were up in the midpoint like right here, then we could like easily pull into
Yeah, okay.
session data. So for me, like I'd rather do projection base, right?
I got those down there for when we're ready to do that. The other structural one I've got is yesterday's mid, but I actually didn't have anything to base that on in terms of using the tool. So I went with projection at that point. It's kind of in the middle, is what I'm saying, between the 5 and the 8. And there's no way I can say, well, give me the 6.5 then of projection, right? Which would be around about what it is. Yesterday's mid, that is.
Right, I'm gonna do this for a boy first.
Okay.
If Jonathan's listening, he does the double and the triple, right? So because he's a really close friend and I respect the crap out of him, I'm gonna do these numbers for him.
Yeah.
All right, Jonathan, your flout probabilities for the double to the upside, second standard deviation, 680, all day is 86% if we're above it. We're above the flout. And your triple is at 850, and that's got a 51. See, when you listen to people and you don't turn them completely, when you actually listen to people who study the markets, whether they're from the institutions or not, they like backtest some of the coolest things ever. And this is one thing that I'm currently testing right now myself, because remember I told you it takes me 500 reps to get anything into my new workflow process. And like they come up with some of the coolest stuff ever. And so like it's about having respect for your fellow trader, whether they're from the institutions or not. Right? Because like I say, always retail traders are better than institutional traders 90% of the time because they just master their kick over and over and over again. All right, so now what we're going to do with this, we're going to put on Josh Hughes open low stat map, and we're going to put on our average daily range. Right, our average daily range over the last 10 days is 339. Right, within the flout. This is what it looks like in relationship to your flout, Jonathan. This is the open, high, low, close by Josh Hughes. This is your flout. So, and we haven't hit either side. So it could be like this. It could be like this. It could be like this. Or it can be like this, right? So that's for you. But the key thing when using a fixed constant like that is waiting for the open, high, low, close. Okay, we got people in. How do I set up a call with you? Discord. I'm not really on Discord. I guess DM me at Twitter, and then if you want to come on here, Texas stocks. You lawyer. It's not that easy. I've been trying to figure it out for a month now, and I picked up bits here and there. I think there's something very solid with the Texas stocks. Like you have to actually, I have to schedule a week for you to come on here and do this with me. Still, all right. But that was for Jonathan. Now let's move on for our stuff. All right. All right. What do you have so far?
Yeah. So the only thing I would say is that we could go false here, which might change the dynamics around the projections. But I've got everything that you have minus the float.
And we're definitely going false. Are you kidding me? Look, like
yeah,
we're going false. Like that's okay. We're gonna
we,
calculate a false day.
I wasn't when I did it though. Let me just get those numbers, mate.
Yeah.
Okay, it's easily
Listen,
done.
I put it out, Jazz West. I put it out like you have to DM me in Substack for the Captain Box indicator so I can verify your subscription plan, et cetera, and then I'll give you access to it. And then this week, all the annual and those members, the founding members, will get access to this script, which I did an article on yesterday.
It's well worth it.
I mean, it's $80 a year, $8 a month. Like,
no, you have to have that. Okay, so has it changed? Plus 2.5. Where are we? Yeah, okay. So on the plus 2.5, I got 82%.
oh shoot. Okay, let me see.
Oh, sorry, man.
Let me get it going.
Yeah.
And it looks like we already hit that. This is all day price.
Yes, all day. Yeah.
627.
So, yeah, thereabouts. Yeah.
What's the percentile?
I've got 82%.
We already met that criteria. All right.
Yeah, we have, and then
What's the
we've
next
got
one?
the 5. I have at it's actually dropped to 63%. We have not hit it.
All right. What's the 8?
The 8 is 45%. Everything shifted.
These are based off of a false day, right?
Correct.
Okay, good. And this should be based off of Asia being wiped through. The mid broken already? Oh no, we haven't done that yet.
No, we went short
We had a false day in Asia.
Yeah, I've not suggested clicked anything with mids being broken or anything like that. No, not at this point.
Okay. What's the 8?
The 8 is 45%.
Okay. Thank you. Let me check something real quick.
Yeah.
So we went short in Asia, and then it was a false, right? Because that phenomenon where, like, after you break out of the 15-minute, you buy it, target the other side of Asia, that actually played out. So when you're filtering, that needs to be incorporated because that's what live price told us. London, we went long to go short. We need to go on and incorporate the false day data. Now, go on and put in, because we're so close to it, go on and see how the probabilities shift if your Asia under gets broken. Jesus, I don't understand. Hey, roll human review. I don't ever change my workflow process. I do it the exact same way every single day. So all you have to do is go on this YouTube, go into the live videos, and just start watching and taking notes, and you're going to eventually pick it up. And we do the same process. We walk it through very detailed. So if you don't understand what we're doing, it's because you're not taking notes properly. All right, so let me pull up my database.
Yeah, I've just done what you asked. It actually doesn't change massively the positive. The negatives, we never got that far just now, but I can see those numbers whenever you're ready.
Okay, what are they?
What just to confirm what I did was I selected a true value on a 3 a.m. to 9:30 break of Asia. So,
okay.
yeah.
Perfect.
So -1 is 95%.
Oh, cool.
Yeah.
95. That's pretty good.
Yeah.
Did we already hit it? We already hit it.
It's an interesting set of numbers, actually. Although they have increased on the short side, 71% minus 2.5.
Excuse me. 75. All right.
Yeah. 71%.
Oh, shoot. Good call.
And obviously these are all day. The -5 is 58. That's increased.
All right.
And the 8 is 38.
And so now what makes these possible to trade is what we're about to go into next, which is going to be the actual distributions by 4-hour periods and the average 10-day. What did you say the -8 was?
-8 is 38%.
All right, thank you. Turn that off. Let me double check your work real quick.
Yeah.
All right, so Asia went short to be a false. They already did that scenario early in the day. So short. London was a long false. Mid broke of Asia, true. So out of 4,280 days, what Asia and London has done has 55%. Yeah, like if you, Jonathan, we need to push him over to the pack trade group. Like he needs to be listening to the pack trade group. All right, so I got 55 days left in the checkbook. Out of those 55 days, I've got 9:30 being the highest probable, 9:30 to 10:30 being an engulfing London.
Yeah.
Right, looking like that.
Yeah.
But then 30%, 7%, 37 plus 6, 43. 43% say it's going to be just a little bit lower. So we know that our 9:30 to 10:30 is going to be somewhere from here down. It's safe to assume that. Now I am seeing a 56% long over 39% short after 10:30.
Yes.
Which increases the probabilities of these highs right here that have individual probabilities of being hit. So what do you want to do with this so far? Because right now, this is the highest probable, right? Let's do our distributions. But like, again, like yesterday, the highest probable trade is the long side because guess what? When a market that skews to the long side, right? So of course our 9, 10, 30 numbers are going to be skewed to the upside. That's why we have these over/under lines to say, hey, if we're not above this London OU or this Asia OU over/under line, target lower. That's why we have this live price component with the captain boxes, right, in the 5/9, because if we're not showing the proper reversal and trend to go higher, we know not to skew our positions. I mean, not to trade our positions longs because live price is saying no. All right. So what do you want to do with 9:30 or 10:30? What do you want that? Which one do you want to go with?
Well, I'm what my database is showing is range. So it's
Yep.
33% of the overall, and it's slightly skewed, as you say, to the long. I guess it depends on where we. I think if we're shooting long and it's bringing the higher targets back in, then range would be worth looking for.
Well, I think, okay, so let's measure out our 9:30 to 10:30. So the
Yeah,
average 9:30 to 10:30 is 145 over the last 10 days. Jeez. Have we done
yeah.
anything today? Like, we've not moved anything. Let's see. We have moved 37% of our average daily range. We've only moved 126 handles. Ah. All right. So we know that our 9:30 and 10:30 is going to be approximately this big, right? So now, if we're expecting a range, then we need to line up that range with the probability,
Yeah,
right?
yeah.
Just one crazy puzzle that we're trying to put together, real human review.
But the range is in terms of its averages could take everything out, as I think you were just alluding there, right?
Yeah.
Both sides of that.
9:30 to 10:30 has the ability to wipe out all these probabilities
Yeah, yeah.
because we are so close together, which is why I'm kind of working on projection probabilities up here. So right now, we're saying that all the probabilities are the downside,
Hmm.
right? Which is fine if that's the case. So if our average daily range over the last 10 days is 339,
Yeah, the take.
right? Let's measure that out and start doing the distribution because that might lead to some more clues. 330. Jeez,
Got it all, man.
something's not right. I'm not seeing something. This is on a 15. Okay, that's not that scary. Okay, so now we have that, right? And this is saying, give me 1 second. All right, I'm not going to focus on that right now. So this is saying that this is our average daily 10-day range, right? 339 right here.
Yeah, yeah.
And for it to line up with these probabilities, it does that, saying that we take out previous day's lows,
Hmm.
right?
You see it?
So now we need to do our dish rows, but we still haven't figured out like if we're expecting a range 9:30 to 10:30, right? What is the trigger for it to respond? Like, is it going to do it between this 63 and 71? Is it going to do it between this 95 and 82? Like, what are your thoughts?
Well, yeah. So I'm thinking that actually, if we consider the midnight open, that for it to be a range, if we continue as we appear to be within the downtrend, the move for the foreseeable is going to be down, but then potentially snap back to midnight in that transition period, um, maybe react somewhere around there, and then create the range. I guess anything is plausible, right? But I'm just trying to think about the
Okay, so
stat there.
remember the first step is are we above or below previous month 50% NFP Friday? We
Yes,
said that we are in the middle of it, but we rejected the previous month 50% 6 times. So
yes,
our mindsets need to be skewed to the downside,
yes.
right? However, because of the day of the week, we're still trying to see the market clue is did we put in the low of the week yesterday? Um, and that will be confirmed today, right? Because unless by magic, right, like we come down and take out these lows at the 9:30, we can expect this low to be the low of the day for now, right? If this is a low of the day, low of the week scenario, right, where the low of the week was established on Monday, right, which is actually a probability, right? Let me do one thing. So let me see.
Yeah, in terms of low of the week, it was pretty convincing it would be the Monday I'm seeing with the date that I have. It's above 40.
Well, it hasn't been, it's been alerted, but we have not confirmed that yet.
Right.
All right, we're going to see. All right, so right there. Low of the week Monday. Okay, let's take this off. Okay, right now, as it stands, right, there was a 33% probability of a low of the week with no variables put in. There's a 13% that it happens on Tuesday, a 13% that it happens on Wednesday, a 13% that it happens on Thursday, a 22% that it happens on Friday, and a 7% that happens on, that's out of the last 46, right? The problem with the 46 is if we're entering a bear market, right, we need to go back to the last bear market. How do I get this? Oh, I have to change the time frame. So let me go to the hour. And where did it go? Dang it.
We have a question from Jazz.
Okay.
Couldn't we have also put in the high of the week based on the rejection of the previous month mid? Yeah.
Yes, absolutely. And that's why we're pulling the probabilities of it right now. Why is this not coming up? Okay, this is set to the hourly. We're on the hourly. Sorry. Nope, 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 nope. Oh, I broke it. Anyway, we need to consider that low of the week scenario from yesterday. Yesterday could have shown its hand and been a high of the week or low of the week, right? It's too close. It's too early to tell.
Yeah.
And like exactly what Jonathan said, like we're going to be waiting for the market clues, even if that means we don't trade today, right? Like I'd rather remember I talked about price risk versus data risk, right? And if we don't have enough data, we don't sit there and try to guess. We try to find supporting data to make a narrative.
Yeah.
But right now, the strip's not working. So we're going to save real quick. And then we're going to reload. Why is this not working? Let me go to the 5 minute. Maybe we'll work on the 5 minute. 15 minute? There we go. And it's still showing me. So there's something I have to put in. No, no, no. I'm going to have to reach out to CJ. They should be giving me a lot more profiles if it's anchored off the 1 hour. Okay, whatever.
Yeah.
Right? Like, he's not going to spend all that much time. Let's do the top 10, or let's do the top 4 profiles that we're currently in and line them up with our standard deviation, right? Which I'm currently working with him, and we're going to set this up. Let's do standard deviations off the 1800. Let's turn this off. Let's put this on Sunday 1800. One, 2.5, 5, 8, 12.5.
Love it.
All right, so now we're anchoring off of Sunday's price, right, which is cut off right here. Let me remove Rollins real quick. Right, we can see from Sunday's price, we never made it up to the 1 standard deviation. We made it all the way down to the 5 standard deviation. So we need to pay attention to the weekly profile that did that. And what did it do? It came up, it came down, 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 it came up, it came up. So this is the one that we're following right now. This is the highest probable one right here because it's synced with the standard deviation from Sunday. And you can see it's this one right here. It comes and makes a low, taking out this low.
Yeah.
Right, and then it goes up, which is what we were seeing in our data anyway.
Yes.
Right, for the day. Remember, it said we should make a low, and then by 10:30 we start going to the upside. So that's what we were seeing. So that's pretty cool.
Yeah.
All right, let's do the distros and go from there.
Yeah.
So now what we can do is we can put right our 930 box towards the low, right, like something like this.
Yeah.
Right, and then we can expect these to be met in the afternoon. All right, so now let's do our distributions, do our high-low of the day zone, and go from there.
Just lining this up like that. Yeah, so obviously you've got your distributions. You're probably better off going with them. Mine are slightly different. I'm happily giving you the numbers if you want to compare.
Yeah, let's do both.
Yeah. So 4 till 8, I have 0.5 as a percentage.
That's fine. That's not that big of a deal.
Yeah.
I like the bigger numbers.
And the 8 till 12, I have 1.18. That's the 80-day look back, all right?
Okay. You have 1.8?
1.18.
1.18.
Yeah.
Let me measure that out. $1.18. All right.
And then the it's actually, and then 0.84 for the 12 till 4.
Dude, your numbers are really okay. That's
No,
the 80-day. Got it.
actually, hang on. I made a mistake. Excuse me. I have made a mistake. I'm looking at the wrong day. Just rewind. So we're approximately right. It's 0.51 for the 4 till 8. Sorry, Mickey. And
No worries.
1.12 on the 8 till 12. And it's 0.8. That's right. Yeah, 0.82. Not 84. 0.82.
0.82. Let's see. So either way we do it, like we're gonna get extensions outside of the average daily range.
Yeah.
So something like this. So rejection off the mid, or it's going to be like this.
Yeah.
And because, okay, so this is why we do this step right here, right? Because this step is telling us not only where we're looking for the high of the day or the low of the day, but we're also looking for the close. Because remember, the close price is the most important price. And so momentum is still showing that, like, the close, that's what being between these 2 points makes identifying the high of the day or the low of the day, and that close price extremely difficult, because you got to close lower, you got to close higher, you got to close lower, and so we're barcoding, which means, like, we need to not put so much emphasis on the things that we get our edge from. So this can go either way.
Yeah.
Right? So we're not going to try to nail the time frame down. We're just going to try to nail, you know, the 4-hour period down. So it's going to look like that. Right? Because, like, if we were in a clear trend, we'd be able to say, hey, this 0.73 is going to close higher for the day. That's going to be the close price. Right? And the low of the day should be happening within this 1.1. Right? But because we can't do that, because we're barcoding, right? These numbers have no meaning other than the fact that you're using them. And so throughout the day, you should be, like, moving this, anchoring this correctly, right?
Yeah.
All right. So with that being said, I am going to call it for the day, and we're going to end this because it's ran over.
Just a bit.
Just a bit.
Thank you, Mickey.
All right. Thank you. And listen, guys, there's always going to be the markets, like, when you're trying to do any kind of projection base, like probability base, it's a puzzle. You're just trying to use the same tools to put the puzzles together, right? And that's what you have to do. You have to use the same tools to put the puzzle together, and it's a different puzzle every single day, right? If you use different tools every single day, then you have 2 variables that are different every single day, and you're just shooting yourself in the foot with confusion, right? So every single day we use the same tools to put a different puzzle together, and that's all